I have never in my entire life seen a more complex picture than what we're looking at right now, not just in crypto, but across the entire world, across all investable markets, across all geopolitical regions. We're truly looking at history being written. And that said, we've been blessed within the last 24 hours with an absolute God candle on Bitcoin, bringing us up to the low $40,000 range, just as people were expecting for the entire market to disintegrate into dust in the face of a presidential executive order, headwinds from the Fed. We have geopolitical tensions, and in general, a market that seems to want to grind lower and lower. But of course, it's always darkest before the dawn. So let's dive in and figure out, is this some form of bottoming market where we could be seeing the beginning of a new uptrend in crypto? Again, I'm not saying we are, but let's explore that possibility. Let's dive into the executive order from President Biden, and let's examine the absolute insanity that is being created in the commodities markets by the geopolitical tensions in Europe. This is a jam-packed episode, so make sure you watch front to back. As many of you know, I've been in full-on build mode, but it's awesome to be back, and let's talk about everything going on in crypto and figure out where the edge might be. Again, if you want my up-to-the-minute thoughts on the market, please follow me on Twitter. Much easier to get tweets out, especially as my days have become absolutely slammed in crunch mode here for both imposters and the marketplace release. So make sure you're following me over there at EllioTrades. And look, not to toot my own horn, but this is stuff we talk about a lot, which is when the market is all thinking one thing, it's good to think another thing. And I tweeted this yesterday at, about 2 p.m. I said, everyone's calling for the same outcome, obliteration of risk assets. When has everyone been right? This is clearly the most likely outcome. It just feels too obvious to play out. Now, I want to pull this apart. Currently, we're looking at an absolutely crazy macro situation, which we'll go through. The absolute obliteration of risk assets and a prolonged bear market, not just in crypto, but in equities, in a lot of things, is effectively a very high likelihood. We need to factor that in, that there could be extreme pain ahead. That said, nothing is just a straight line. It's not so easy that you just flip from long to short and all of a sudden you just keep making money year round. Of course, the rubber band, when it gets stretched too far in one direction, has to come back. And we at least saw the first short-term catalyst for this flip back here with the President Biden executive order on digital assets. Now, this was a boogeyman, to say the least, that everyone was worried about. Is Biden just going to lay the hammer down here and put a stop to everything that we know and love in crypto land? Well, we have our answer now, and that answer is a resounding no. In fact, this is more or less a dovish nothing burger, just an executive order to ensure that something is being researched and a plan is being formulated. It doesn't seem like anything's going to come out of this until at least 2023. We see here that he addresses protecting U.S. consumers, investors, and businesses. He talks about protecting the U.S. global financial stability to mitigate systemic risk. He talks about mitigating the illicit finance and national security risks. But then he also talks about promoting U.S. leadership in technology, economic competitiveness, and to reinforce U.S. leadership in the global financial system by directing the Department of Commerce to work with the U.S. government in establishing a framework to drive U.S. competitiveness and leadership in leveraging of digital asset technologies. This is what I'm talking about. The world is immersed in conflict, and if you haven't noticed, everything comes down to barrels of oil, to US dollars, to effectively global economic competition. Security is a word that's being thrown around here, but I don't think anyone really believes that there's going to be a boots-on-the-ground war between Russia and the United States. Nope, this all feels very economically driven. So of course, an opportunity like crypto, which everybody knows is the next battleground for innovation and economic growth, that is absolutely going to be something that every nation needs to take seriously, which is why on this channel, we've always remained optimistic about what the government might do in the future. I don't think we're going to see bad regulation rear its ugly head. I think all regulation will effectively facilitate more money coming in. That's my core belief, and I'm sticking to it. Promoting equitable and safe access to financial services, support technological advances and ensure responsible development and use of digital assets, explore a US CBDC. All of these things seem dovish, bullish, exciting. Of course, there's going to be rules of the road, but that is something that the crypto industry has been begging for literally years. We want rules so we can follow them, so we know for sure that we're all compliant and happy. That is something that every single crypto innovator wants in this industry. I desperately want that. This whole issuance was music to my ears. Now, thankfully, actually, this executive order leaked last night, and even though the White House deleted the post shortly after, archive.org caught it, and so we were able to actually see this last night, and so we got a preview of it before before this was actually released today. So I tweeted right here, executive order is bullish. I saw some reply guys actually commenting that it wasn't. But what we see here is that the markets absolutely agreed with my sentiments, with Bitcoin completely rocketing. And you can see it happen right here, right about when that tweet went out. We see this explosion on the Bitcoin chart, because it feels as though digital assets are going to have a clear home, a clear safe space in the biggest, most important financial market in the world. As Light said, the executive order was constructive, absent any new regulations, speaking positively about innovation in the space. A boogeyman for months now gone. And I think that's really important to understand, that the crypto industry goes from boogeyman to boogeyman. The classic boogeyman was the Chinese government banning Bitcoin. Now that boogeyman doesn't really hold any weight. They did it a couple days ago. It had zero effect on the markets. The next boogeyman has always been regulation, and that keeps rearing its head here and there. But in my opinion, overall, the industry will have a home. There's too many amazing contributors, both here in the United States and abroad. You just can't decide to ignore this industry. There needs to be just rules of the road and a process for projects to become compliant if they're not currently compliant with those rules. I believe that'll happen. And again, this just shows that boogeymen can leave as quickly as they come. Now, I really like Travis Kling's breakdown here. He's like a macro investor. He's a Wall Street guy. He runs his own fund, and he just kind of goes through everything. And I think it's a really nice, succinct breakdown of what's going on. I'm going to give my commentary on what he says afterwards. But he says a couple thoughts on the market. It's obviously really tricky here, and the chop is real. Not financial advice. I've been wrong plenty recently, so just DYOR and make the best call for you. Again, I've been wrong plenty lately as well. No one person can see through this incredibly dark and twisted corridor of macro, geopolitical, commodities, Fed tightening. There's so many factors going on. The game is no longer simple enough to say, okay, this is clearly going to have this effect. There are too many cooks in the kitchen. So everyone needs to understand that you need to take responsibility for your own actions here. Of course, I'm going to be giving you my opinion, and hopefully it helps. Hopefully I'm right. But again, no promises. No one can tell you for sure that they see the future right now. Anyway, onwards. We're currently trading at the point of control for the entire range, going back to the break of $20,000 in December 2020, and the risk of sounding like the trader, 38K to 39K is an important level. Back to July 21, we've seen significant demand for Bitcoin in the low 30,000s. Specifically, we revisited these levels in July 21 and again in January and February 22. The demand to buy seems to overwhelm the supply to sell, and it just drives the price up and moves pretty swiftly higher. So we've seen now several times that this mid 30,000s range is real bouncy. Now, we did see that in the single-digit thousands and about the 6,000 range back when Bitcoin was in its last bear market. And again, I'm going to talk a little bit about cycles speeding up and tightening a little bit later in the episode. The 30K levels for Bitcoin have been super, super resilient. Keep that in mind. So he says effectively there's a significant amount of capital that begins DCAing at about 50% off the recent high. And of course, there's just people who don't want to sell 50% down. There's a belief that Bitcoin will come back. And so, of course, people don't want to sell 50% down. People do want to buy 50% down. It's kind of a nice round number, half off. Sounds nice, feels good. And that's why these numbers are kind of hard to push through. But again, they're also imaginary lines in the sand. So don't get emotionally tied to any of this, right? The point is the recent Bitcoin price action has been more grinding on the way down and impulsive pops on the way up. We've now seen squeeze shorts twice in the last 9 days, despite a pretty horrendous macro backdrop. That's telling. To be clear, there's a ton of money that's already come out of Bitcoin and crypto broadly. The large majority of macro tourist money left in December and January, and this was because of Fed tightening concerns. We talked about this, how the tourists are now gone, and what's left now are the idealistic sort of hodl investors. The group left with BTC here is weighted more heavily towards idealistic bulls with longer time horizons. Unequivocally, the value proposition for Bitcoin has become more compelling in the last month, not less. And of course, we know that as governments start to mess with currency, as the ruble fell literally into pieces overnight, as we saw governments clamp down in Canada over fundraising, this stuff only strengthens the narrative for censorship-resistant finance and transactions. The narrative for Bitcoin has never been stronger, in my opinion, and it's all thanks to the governments. The governments are making literal ad after ad for Bitcoin. We're going to talk about all the ripple effects of this, but let's get through this first. Nuclear weapons, world war, China-Taiwan escalation, large-scale cyber attacks, the list goes on. There's so much risk out there of stuff that could black swan markets or really have damaging effects. We cannot see through and predict the future here. It's important to realize that any of this could happen and could lead to a capitulation or cascade. There's a ton of fear in the market, both crypto and macro. A ton of de-risking has already occurred. Barring major tail event, the market is already expecting a ton of bad things. And the sellers that wanted to sell have largely sold already. but price is where it is. I don't think this means we rocket back to all-time highs in coming months. That's not my base case. Although you never know with BTC, but so far, despite a really crappy backdrop, BTC has held well against the drying up of supply in the mid to low 30s. So to break that July 21 low at 29K, I think more of those bad tail events will have to come to fruition. If we come to lose that level, I would guess you'll see a massive supply come to the market. And we'd be in for a really rough ride in the 20s with hundreds of thousands of BTC changing hands. Those events are typically cyclical bottoms. This could certainly happen, but it's not my base case barring a really bad tail event. There's absolutely nothing at risk right now to the medium to long-term investment case for Bitcoin and the rest of this asset class that is stronger now than it was a month ago. The near term is highly uncertain and significant risks are present, but this technology and asset class are going to be tremendously important into the future. I'm certain of it. They already are. And he cites here the executive order. Now, I wanted to show here just the bull and bear case. You see two traders here, plan C, obviously a play on plan B. He's showing you're all acting irrational right now. Higher high and higher low. High time frame, uptrend structure not broken. We have very strong support between 29 and 35K. Sell pressure is trending down. D-flow is nearing historic lows. Old hodlers have stopped selling. But on the converse, you have someone saying, hey, Twitter goes crazy when Bitcoin pumps. Even when it's the third pump of a similar size in a compressed zone, PA is still range bound. Again, so bull case, bear case, obviously this is much shorter term time frames. This is much longer term time frames. Again, you could look at these charts and paint them either which way you want. The reality is that I can't find one person who can tell you for sure what happens next. So how do you approach a market like this? Well, I'm going to give you my thoughts in just a minute. We have a friend of the channel, Darius Dale, saying how bullish or bearish you are comes down to your answer to the following question. Will Fed prioritize inflation or growth? For what it's worth, we believe the Fed will prioritize growth, but only after financial conditions tighten enough to tell them stop prioritizing inflation. Now, of course, we're looking at this global conflict as a way to stop prioritizing inflation because it's unlikely that inflation will be the first and foremost concern. However, the conflict created an escalation in commodities markets. Let's talk about that for a second. Commodities have been explosive so much to the point where the London Metals Exchange actually bailed out commodity bears and stopped the exchange trading and started to reverse trades because the commodities prices exploded too much, too fast, and wrecked too many institutional players. The metals market is like the oldest market in the world, and of course, it's probably the most crooked for that reason. And we see here the London Metals Exchange literally saying, nope, this breakout, no, we're just going to reverse all these trades. Gianmarco Carlo Cassio saying, in all seriousness though, shutting down a market, reversing trades, LME better have a solid legal team. Now, I also wanted to talk about this briefly because we're talking about commodities exploding, like these charts are absolutely insane. But it's important to realize that commodities are not just another market to play. As Nick Carter said, remember, commodity prices charts aren't just numbers on the screen. They represent the real goods we need to survive. Commodities prices are inverse indices of human flourishing. Down equals abundance, up equals misery. Oil price rises are akin to rate hikes. They inhibit economic activity and at sufficiently high levels plunge us into recession. Energy creates fertilizer and food. Costly energy equals starving in the dark. Commodities are not just another market to go gamble on. Commodities are things that we desperately need to stay low. And this episode, triggered obviously by the conflict in Europe, is something we desperately hope can be reversed very, very quickly. Now, big picture, Ari Paul says, even Wall Street global macro traders aren't used to this level of complexity. Traders on Wall Street are trying to figure out how a wheat shortage in Eastern Europe may impact Vietnamese manufacturing, etc. I'm not going to read through all this, but the point is, this is a super tangled web that we've woven here in the early part of 2022, where even the most sophisticated investors feel quite lost at sea. And meanwhile, we've seen a major cooling off of the NFT market. As you can see, I'm not, again, trying to toot my own horn here, but I did predict that February we'd see the peak of the NFT market. It actually, according to volume, came at the first day of February, 2-1. However, we did have a nice little surge here about the 11th of February. And then after that, it's been very, very, very bad. So bad that we've seen historic levels of toxicity and vitriol in the NFT community. But of course, the NFT market has been through many, many bearish periods, 4 distinct bear periods over the last 12 months. So however long this lasts is very much so uncertain. I believe that a lot of this is due to the fact that overhyping NFTs with no clear utility has led to this particular cool off. Again, we're going to be doing more NFT specific content in the coming days. Of course, I'm going to be drowning this community in resources about imposters over the next few weeks. I'm super excited to give all the updates over there, but let's move on and try to summarize everything that we've talked about today because there are so many things to talk about. We have a war going on. We have skyrocketing commodities prices. We have a cool-off in the crypto sector. We have Fed looking to tighten economic conditions and reduce inflation. We have inflation going crazy. We have an equities bear market. There are a lot of competing factors here. The most important thing to realize is that this isn't just a typical crypto bear market where the euphoria wears off and then all of a sudden we need to reset the sentiment in the market. There are some very real external factors that are contributing to this crypto bear market. That said, these are boogeymen that can in many ways be resolved as quickly as they come. The Fed has been notorious for reversing its stance as soon as economic conditions allow them to. The Fed wants the markets to go up, but not so much that it ruins life for the average person in America. They want wealth and prosperity, but not so much that we end up with a neo-serfdom with the haves and the have-nots having an insurmountable gap. These are the core guiding lights of the Fed, and right now we are in extreme territory. This has led to a major cool-off. This has led to a cycling of macro bros who were in Bitcoin because of the Fed conditions have now left. Now, I also want to talk about cycles in crypto as we've seen them tighten up and tighten up. The bull and bear cycles have gotten shorter and they're faster. So where we saw a 12-month almost unabated bull market in 2017, we only got bull markets in the recent cycle that lasted about 2, maybe 3 months at a time. And they're getting shorter and shorter, and they're also getting more frequent. There's an argument to be made that the rally that we had in the second half of 2021 was actually a bear market retracement. And this was sort of akin to the rally that we had in Bitcoin in 2019, which was really retracing the bull market of 2017. It's really hard to say where this lands, but what we know is that the biggest and brightest minds in the world are flooding into the crypto, Web3, and specifically the NFT space at a rate that we haven't seen any particular trend grow in crypto in history. There's a lot to be excited about. There's a lot to be cautious about. And the most important thing is that you don't need to be a hero right now. Being a hero right now is the absolute worst possible scenario. There's no clear direction, and the potential for a black swan or a negative event globally to absolutely decimate the market is very real. You need to be prepared for what would happen if Bitcoin goes down to 20K and altcoins drop another 80%. I'm not kidding. That is possible. Is it probable? I don't believe it's probable. I personally am pretty neutral in the market. I'm farming a ton of stable coins. I have my Bitcoin and Ethereum and then my long-term holds. And then we have coins like Luna making new all-time highs, probably because of the UST reserves, the UST stability, and the fact that UST continues to pay out 20% APY, rain or shine. It's the most trusted and most decentralized stablecoin that there is. The actual stablecoins on Ethereum, USDC and Tether, have trust issues. And of course, you could say DAI, but that's actually backed by USDC. The point is that Luna and Bitcoin have emerged because of their focus on decentralization. It's a very interesting moment we're in. Regardless, I'm still very, very excited for the future here in crypto, but it's important that my excitement about the industry doesn't outweigh my belief on how to trade these markets, which is caution. The reality is anything could happen. We could explode upwards. Bitcoin could become the next hot thing due to governmental moves, due to geopolitical tensions or cross-border payment issues. We could also see a black swan come in and completely ruin this market and send us down into obliteration. So if an event like that would completely crush you financially, then this is probably too much risk at this point. But of course, if you're able to just stick around, remain engaged, and watch these markets, there seems to be a never-ending merry-go-round of opportunities coming around the corner. Of course, being a bull right now makes you a contrarian, and I do like living in a contrarian state of mind. The reality is that it's always darkest before the dawn, and the crypto market tends to heat up when you least expect it. But it's very possible that we end up with some prolonged bear market, not just in crypto, but across many markets. It's very possible that there is a huge amount of pain coming to the global markets and the people of the world. So you got to keep this in mind. There's a very real human element here. Regardless, I'll be here. I love crypto. I appreciate those who have given me some time to focus on building my products. Again, I'm going to be making as much content as I can, trying to elevate the level of the content. And instead of doing as much sort of rapid day-to-day content, which is what the bull market really demands, focusing on bear market deep and robust education and trying to make each video as impactful as possible and as evergreen as possible. Those are going to be the ways that I'm going to try to refocus the channel here now that the market has fundamentally shifted. Regardless, I hope everyone is safe and sound wherever you are in the world. I thank you so much for watching. If you like the video, and I'll see you very soon on the next episode.